Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is, what is today? 22nd or 23rd? So early. 23rd of June, 5 a.m. Usually what I like to do when I get up and I start the trading day is I bring up my multi-screen view of, I should say multi-pane view of the markets, just to get a quick feel, plus the news, obviously. And what we're looking at here on top currently, this will change, is the dollar. The dollar is under some pressure on a 4-hour time frame. I have it down here as well, center pane. It is off the lows, but it could be just a brief bounce. To the lower left, we have the 10-year Treasury note, which at current is down, which means that, bond yields are moving higher or flat. And to the lower right, we have the VIX, which is very weak. Very, very weak. When you get these rounding tops and lower high rounding tops, that's pretty weak. So the bias this morning remains to the upside for the overall markets. Now, yesterday, the QQQs hit all-time highs. And let's bring them up. Go to the NASDAQ 100. And we're now negative. We were higher. And we maintain a short position here. And I spoke to members last night on a market wrap about setting expectations. You know, one of the worst things you want to do in life is be short of an index that is making new all-time highs. Because there's a phenomenon out there, what I like to call clear blue skies, meaning you're breaking out to new all-time highs, you're short. However, you have no sellers of like mind above, meaning overhead supply above. So no people waiting to get made whole. Now, what you do have potentially are resistance levels that are extrapolated upward from prior peaks. And we'll take a look at TrendSpider in a moment. They're good at identifying those. You don't always have them. They're an algorithm-driven base resistance level. Whether or not we have that on the QQQs, not quite sure. You know what? Let's just check it out now. We're talking about it. Before I forget. So, yeah, here we already have it. This is a daily chart. And we hit new highs yesterday. What was the high of the day? High 348.03. We have a lot of upside potential here. However, we do have resistance, which is rising. This is subject to change day over day at current 365.69. So this is devastating potentially if we decided to say, you know what, we're going to ignore all-time highs. We're going to ignore the resistance level above. The only reason why we're hanging on here for a potential pullback on the Qs is that we've seen this show before recently where we've had breakout point failures on the Dow Jones Industrial Average or bull traps, meaning we've broken out only to fail and roll back over. Small caps multiple times on the small caps. So I want to give it the 3-day rule. And that 3-day rule, meaning 3 days at and above all-time highs, at and above resistance levels. And should we fail to hold this breakout point here at 346.74, then we need to expect a retest and a possible break of 345.32. If that fails, then we come down here to 339.66. And I'll be honest with you, I don't come on here to talk my book. The probability of that happening is fairly low, but it has happened lately. And these things come in tranches. And so you can go a long time without this happening. You have successful breakouts. Why? Because the market is in a strong uptrend. But we're seeing a lot of fits and starts, a lot of I won't say propaganda. That's being hyperbolic. A lot of how do I put this? Let's just call it manipulation by the Federal Reserve. A case in point, Powell come out hawkish last week, quote unquote hawkish. I think that he was a dove, but the media and the algorithms construed him to be a hawk. Then you had Bullard come out. He was a bit more hawkish. I believe that was the following day. And then you had Neil Kashkari come out on Friday afternoon, late Friday afternoon, another Fed governor out of Minneapolis, and he was very dovish. So it's like this manipulation of the market, trying to set expectations, trying to keep the market from rolling over, especially into the midterm elections. And the result is that you had the markets, which I said initially when Powell came out with a statement, I said, this is a dovish statement. Why yields ripped up higher last Wednesday, I have no idea. It can only be the algorithm scraping the headlines yet again and being wrong. And I mentioned to members, I said, listen, our gold positions, our silver positions took it on the chin. I'm not selling. In fact, we bought more on Friday because they sold them off so hard. They're sowing the seeds for more inflation. Now we have the PCE coming out on Friday, right? Friday, yeah. Today we have the PMI flash, the manufacturing and services index coming out. So that's important. Both those indexes coming out today. And tomorrow we have initial jobless claims. Back to the Qs. So what I want to do here on the Qs, and you find any value in knowing where, when you're at all-time highs, that you have resistance all the way up here, 35% discount code below, folks. I mean, it's invaluable. I'm going to create some alerts. Because if I do have to stop out of the trade, which is fine, we're not heavy here. If we stop out, we stop out. The only crime is denying that you should be looking to pull the parachute cord. Pepe the Frog, love it. You've been loaded up on gold like crazy? Good for you. Very wise move. And if we break this initial support level on the Qs, I'm not going to look to add more to the short. It's just going to tell me, hey, listen, get ready. Here's my breakthrough. Touch, bounce. Now, if we touch or bounce, and then we proceed up higher relative to yesterday's highs, then we got to think about bailing here. But I'm going to try to give it a little bit of rope. Why? Because, again, we have economic data coming out today, not heavy data. Tomorrow, though, initial jobless claims, and we have GDP revision coming out when? Is that Friday or Thursday? Friday. So on Friday, Thursday. On Thursday, we get the revision to Q1 GDP. Think about this. If we see a pullback or a revision downward on GDP, yet inflation rolls in hotter on Friday, the market's not going to like it. I mean, it's not going to like it at all. It's going to have a hissy fit. So watch the dollar in that case. They may rip the dollar up higher because of inflation. Then they realize, oh, we're wrong. We got to buy gold. You got to understand that what's running this market are algorithms scraping the headlines. They see inflation run hot. What do? They buy the dollar. Why? I have no idea. No idea. Because I guess I shouldn't say I have no idea. The reason is because what they believe is going to happen is that the Federal Reserve is going to raise rates like immediately within the next month, 3 months, 6 months. It ain't going to happen. It's not happening. They can't raise rates. They'll collapse the economy, especially in front of the midterm elections, which they're not allowed to do. So, no worries there. So that's why Pepe the Frog is absolutely correct with his call on buying gold. I put on a few cheap puts in the regular market while volatility is low. I have zero problem with that. So you're watching the implied volatility versus the historical volatility, and you're putting on cheap puts as insurance. Wise move. Nothing wrong with that. Bust the stacks. Hey, brother. Grab some Bitcoin at 28.8. Good for you. That was. Did it hit that? Did it hit that price yesterday? That was my call. We'll come back to the Qs. I didn't watch it yesterday, although at the end of the day, I did buy on a bullish reversal bar more Coinbase. What was the low of the day yesterday? I nailed it, 28.8. That was our price target. I got my chops busted for that call. That was way back here when it first started rolling over. I'm glad you remembered. I wish I could say I think that it's done going down, but just beware here. We're still putting in lower highs and lower lows on Bitcoin. So I would love to say the coast is clear, but just be careful. I can see that we're up very, very nicely this morning, up over 4.5%. So good for you. But you said you're out. Okay, good. So you day traded. Okay, cool. All right, back to the Qs. So if we break this initial support level, we're just going to watch it. Now, if we break this support level here, and it doesn't matter if we trade intraday down below it. What matters is that we close there. Now, this is a chart. Let's do a hypothetical. This is a chart where, you know what, I may not want to have a short position on here, but if we pull back and do a retest of the support level, and then we have a continuation breakout higher, and we stop out of our short trade, would I not want to be long, assuming that yields are declining? Sure, why not? So what we want to do automatically is just know that we have resistance all the way up here, and that we want to keep a lot more sensitivity on early warning signal. That we want to exit the trade and book profits. Not to cause confusion here, we are not currently long of the Qs. We would look to get long should we stop out of our current short. Let's go to a weekly chart. Yeah, good looking chart. We'll give it a little bit of room here, not much. It looks as though they're going to take it up higher. Okay. Let's get back to the pre-market activity. All right, Bitcoin looking good. We went over Bitcoin. US dollar, what are we doing here? Pepe the Frog, I know, is very, very interested in the dollar because the dollar trades inversely of gold and the miners. This is a daily chart. Let's do a deeper dive. This is a morning show, family-friendly show. I think that we identified the other day on a 15-minute time frame. Here, let's go to it. On a 15-minute time frame that we had a head and shoulders setup forming on the U.S. dollar. Left shoulder, head, right shoulder forming. We've begun to break down here. We've broken one support level. This now becomes support level number 2 to break, hopefully. If we get a break on the dollar below 91.58, there's a big air pocket in here to fill. You know, we'll have a little bit of a potential speed bump at 91.33 thereabouts, but ultimately we could see a collapse all the way back down to a 90 handle on the Dixie, and that'll be good for what? Commodities, right? Especially commodities that trade with a very, very tight inverse correlation to the U.S. dollar. What are those? Gold, to a lesser extent silver, to a lesser extent oil than gold. But gold is the primary Pimp Mac Daddy inverse correlated asset to the U.S. dollar. I want to stick with commodities for a moment because the dollar is looking weak. I want to see if anybody's front running the potential trade here. So we'll go to gold. Gold picking up steam. Now I created this chart. My chart's got all messy like spaghetti with all my support and resistance levels. So you notice I cleaned them all up. There may be a few that are still messy. But I created this wedge formation. And when I went to bed last night, we had yet to break out. In fact, we were flat on session. And this morning, this bar opened up at 5 a.m. You can see that we're breaking out of this 4-hour wedge formation. We have very tight Bollinger Bands, which is good for a Bollinger Band squeeze. Let's move on over to, first, before we move on, I just want to check out an hourly chart. Have we pulled back to retest yet? No, we have not. So what we're looking for, we have the breakout, this last 1 hour bar. We're looking for a pullback here and a potential retest of 1782. That's a good thing. We want that. And then we want to see a continuation move up higher out of that retest. Ramon Tislip. Good morning, Bob. Good morning to you, pal. Could you take a look at NNDM later? Sure. Let's just stick with commodities for a moment. Copper up, still sloppy. No trend per se. If there's any trend, we remain down longer term. So I'm looking for a revival of the commodity trade other than oil, which is still very strong, and natural gas, which has been very strong. Speaking of natural gas, just bring it up. We're down at current. But natural gas looking really, really, really good here. Silver relative to gold since last Wednesday has been very weak. And this is one of those charts where it looks like spaghetti. I'm going to clear off all this. Let's start new. So we had a bit of a breakout here on a 4-hour time frame. You can see here's that retest. This is what I just talked about on gold. Let's drill down further. We broke out, then we pulled back, and we did a retest of the breakout point. So what the market is telling us, what was resistance over here is now support. And now we're beginning to see an attempt to break out to new higher highs. So this is our wedge formation, very similar to what the chart of gold looks like at current on a 4-hour time frame. So silver, of which we are long, looking good. Our RSI is validating the move up higher. And there's the breakout. So we're looking good here. Let's just create an alert on silver. We're looking to add this pullback. At some point in time, we're going to be buying more. At or above, and we're good to go. There's an alert. Okay, what else do we have going on here? I want to take a quick look at agriculture, because our esteemed, the Honorable, His Majesty, Jay Powell says that inflation is transitory, meaning it's temporary. Okay. I've been coming on here for I don't know how long, a year and a half, talking about charts of agriculture, stuff that people didn't even want to hear about. Lumber prices, way before it was a headline commodity topic, talking about how inflation is here. It's rampant. And the only reason why now it's really a headline topic is because these stocks, or I should say commodities, have taken a pause. And it's enabled the Federal Reserve to come out and say it's transitory. Well, I'm looking at a chart here on a 4-hour time frame that's just a nice consolidation and getting ready for a rip up higher. And when you take a look at it from a weekly chart, does this look like it's temporary? Or does it look like we've pulled back, we're consolidating nicely on a weekly time frame, we've reversed off the lower band of support, and now we're looking for a rip up higher? I don't know. I think I'll go with the weekly chart. I think I'll ignore our esteemed, the glorious Fed chair and his commodity picking skills. Soybeans took it on the chin the other day, really, really hard. Yeah, here was that big sell-off, man. They got crushed. Are we getting a rebound? Not really. We've bounced here. This is not something I would come out and say comfortably that we've seen an opportunity here to buy. We did manage on let's go to a 4-hour chart. We did manage on a 4-hour chart to recapture support. We broke back down, but now we're flirting with a consolidation here. So this is no reason to buy just yet. Where it's time to buy if you're a futures trader, or you can buy a Texium ETN off of the, I think it's the Amex exchange. Just go to your online broker. I'm not sure what the symbol is. But you can buy soybeans, corn, wheat, and it trades like a fund. Once you begin to break out of this 4-hour time frame, then you're going to see people take notice of, okay, we had our capitulation sell-off, now we're putting in higher lows, we've consolidated, now we're breaking out to new higher highs. Keep an eye on it. Pepe the Frog. Some of these range-bound stocks are great for contrarians, and some of these sideways plays, at least for scalping. Yeah, or else you could, on those sideways trades, look to sell strangles, open up a strangle trade, just generate cash flow on them. So that's another strategy to employ. We've been doing that with many stocks since April. Once this market became somewhat lethargic and range bound, very overbought. So we have earnings coming up in the beginning of July. So I've refrained from putting on new trades like that because we're going to be doing a lot of strangles during earnings season to hopefully repeat our last earnings season when we killed it. So more to come on those trades as they come up. In fact, let me do a couple of videos of the trades we put on last quarter to show you how we traded options during last quarter's earnings. And I would not go buying stock in advance of earnings. We don't do that. So not that I'm saying you are. But just as a caveat and a disclaimer, don't do it. You get hurt at some point. I got out of selling premium because it's tough to scale because of all the collateral. I guess. It depends on how long you keep those trades on. You said earlier that you're looking for stocks with high implied volatility, right? So if high implied volatility relative to historical volatility. So if you're right in that if you're trading or selling premium on those positions and you're holding them to expiration, yes, very difficult to scale because you're tying up that capital for 30, 45 days, that sweet spot of time decay. The however is that if you're playing the IV crush, where you have that, for those not familiar, where you have historical volatility, which is way below implied volatility, and you're selling that premium, and you're taking those profits quickly, and you're rolling out and into another trade, that's how you can scale up because you continue to build your account balance. You sell high IV and you buy low IV. That's what you're supposed to be doing. Yes, a lot of people don't understand that, and that's why so many people lose money in the options game. It's a numbers game. Even managing winners is 50%. Then you really have to ask you about how are you taking your losses, and that's the key. Are you rolling and you're holding up that capital until you get made whole on losing trades? There's a big debate out there. I've seen some analytics where it works out in the favor of the trader, assuming that the loss doesn't exceed 2 times the net premium taken in. So I'd have to see what you're doing, but you can scale with selling premium. I have to dispute that. Now, I rarely buy premium. All right, so you may want to think about doing some rolling because remember the market's cyclical. So I won't roll. I won't roll on like the Qs I just went over. I don't have an options trade on there, but I'm not going to roll a stock or an index that's breaking out to new all-time highs, and I don't have an edge. I need to have an edge. So I wouldn't roll that position. I would take the loss there, move on to something else. But if I have a stock or an index that has overhead supply above, a lot of speed bumps in the way, then I'll roll that trade. And I'll roll up the untested side or roll down the untested side, and I'll continue to collect the credit until ideally I'm made whole on the trade, and I would have made profits on the untested side of that strangle. So 2 weeks out is way too short term for me when doing a strangle. If you look at the statistics, you look at between 30 and 45 days, and that's where you get the vast amount of your time decay. And the other thing is when you have that 2 week period, you're not getting paid enough to get far enough away from the strike, and you leave yourself susceptible to a binary event. That is what I want to avoid. So what I would offer that you do, and maybe you're doing it, I'm not going to pretend that I know what you're doing. Make sure you're using a probability calculator and know where your 1 standard deviation is or your 2 standard deviation on a high implied volatility position. Oh, I see. Okay. Right. You don't get the theta on a 2 week time. Yeah. Okay. All right, so it sounds like you have it down. I'm not sure why you're not scaling though. You should be able to scale with that type of strategy, because it sounds like you're managing winners and you're not holding till expiration, therefore avoiding a binary event. So not quite sure. So let's move on. We'll get more on the truth here. Lethargic. Where are we on a weekly time frame? Potential higher lows here. So here's our correction. Here's a potential higher low. Either it's my mouse or Thinkorswim. Probably my mouse. There's support on a weekly time frame. We're consolidating now. I want to take a quick peek at lumber. Lumber had really gotten hit hard. And remember, folks, why this this rally ended. It's because the Chinese released their strategic reserves of a lot of industrial metals and lumber. You had a lot of speculators out there hoarding lumber, and they dumped it on the market. But that's a finite event. Wow. Big move here. Okay. Let's take some chart requests. I'm getting long in the tooth here in time. Yeah, I love the IV. I got to be honest with you. For the longest time, I didn't pay attention to IV crushes. I didn't play option. I didn't play earnings and high IV. I just went for the theta trade. Wrong move. It was enlightening. Really enlightening. Because I was always taught, avoid the binary events, avoid the large losses. But then when you look at the options, you start trading strangles on earnings, you really realize, wow, there's a lot of money to be made here in a very short amount of time. So I'll be talking about that when bank earnings start coming out. I'm going to put together a list of names that will be trading, and I'll be sharing those trades. And I post my trades we have a Slack forum. And I post them all in here. These are all my trades. Some of the other members post their trades as well. So they're real trades. They're not joke trades. All right, what do we got here? Tesla, I'll take 2. I know I had another one here. NNDM. NNDM, I haven't gone over in a while. Nano dimensions, right. Nice pullback here. Wow. Very nice pullback. Let's clean this up. Let's take everything off. I just want to get a feel for where we're at. Okay. Volume thus far this week. This is only 2 days. Volume is definitely going to roll in above average. Assuming that we close up higher, that's a really great thing. And so far this week, let's throw up the automated trend lines first. We'll support way down here. Let's throw up my manually drawn lines. We're right at resistance. So what I would do here is set up an alert. I don't want to use a monthly chart to set up an alert. I don't get alerted quick enough on a monthly chart alert. Let's get rid of this. Let's drill down to a weekly chart. All right, so I like the monthly chart so far. Here's support all the way down here. But we do have more support. And to me, this is more attractive. Why am I getting this little... Let's try this again. I think I clicked the wrong button. Yep, I did. Okay, so we have higher lows getting put in here on a weekly time frame and on a monthly time frame. I want to know if we break out. No sensitivity. All I care about is the breakout and a close above resistance. The other thing I would do here is watch, because we remain in an ascending wedge formation. So that doesn't mean that we're definitely going to break out this week, but if you get a pullback to this lower band of support, it's a great area to initiate a trade, because if we break it, you stop out with a small loss, assuming that you stay small with your opening position. And we'll go with 10 days. Touch, bounce, boom. So the weekly chart's looking good. Nice bullish reversal bar off the lower band of support. Daily chart. The daily chart looks really, really good. Very, very nice. We have resistance at, what is it, 820 per share. Really, really nice. You have a nice W formation on your RSI. Take note of the higher low. Yesterday's volume was very strong. And NDM looking good as a recovery play. Obviously, I wouldn't suggest going all in. Let's check. There's not enough data here to go over seasonality. I just have 2 years worth of data. So NDM bullish, looking good as a recovery play. And the thing to remember here, and I'm sure I said this way back when, because I've gone over this multiple times, is that this wasn't going to end well. This rally up and through resistance and above the third standard deviation Bollinger Band wasn't going to end well. The poor SOB that bought up at 1789, think about that guy if he's still sticking around. Either he blew up his account or he's just hoping to get out where he bought. And it's going to take a while to get back there. So So that's why we do not go buying stocks trading above their third standard deviation Bollinger Band ever. Never. We'll leave it off with Tesla. Tesla's looking good. Monthly chart, no new monthly lows. First rule of buying a stock in a correction, it's got to stop going down. $608, nice support. Weekly chart. Not loving the weekly chart. I'm not bearish on the weekly chart. I'm just not trusting of it yet. Normally what I like to see is a double bottom retest, right back here, right? You pulled back, you rallied, pulled back, higher low, rally. Yes, it failed, but you did get a continuation breakout. We're not there yet. This is the first leg of a W formation. So while, sure, it can press up higher, it's a cult stock, but me personally, I would rather see a pullback, a higher low, but I'm not saying that it won't move up higher. It quite very well will move up higher. I'm just not trusting of the chart and that we won't at some point in time get stalled out, perhaps up at 653, pull back, put in a higher low, and then proceed up higher. Daily chart, and that's really just all about looking for a base, a nice solid base to break out of. It's only natural to want that. The daily chart looks very good. Here's the value of automated and manual trend lines. We broke out. Here's the automated trend lines. We bounced off of support. That was a buy signal. And if you use a tight stop below, you had a nice trade. So take advantage. TrendSpider, 35% discount code below. Folks, tomorrow night we're going live 6 p.m. Eastern Standard Time on YouTube. From 6 to 7. We do it every Thursday night and Sunday night live on YouTube. So join us there. Smash that like button. Subscribe. I have an opt-in email list that you can get alerted 15 minutes to a half hour prior to this going live. Only enter your name on one list, or else you're going to get multiple emails. You get ticked at me because you're going to get 2 alerts and you think I'm spamming you. One of the opt-in email lists is getting my 5-part video tutorial on my top 5 candlestick patterns. The other list is just to get alerted 15 minutes to a half hour prior to going live. Enter your name only once, okay? Everybody gets alerted on all of our lists when we go live. So enter your name once. Folks, have a profitable trading day. Thanks for joining in so early. I'll talk to you soon, and be well.